I started Florida Virtual Bookkeeper in 2016. Before then, I had been a corporate bookkeeper, so I was really good at the technical stuff, knew nothing about pricing. I didn't need to. When I officially hung my shingle in 2016, that's when I realized I really did not know how to be a bookkeeping business owner. So I thought I would just do what my previous tax accountant that I collaborated with did, charge by the hour. But because I was a new business owner, marketing is not really my thing, I started to undercharge myself from the very beginning. And I did everything that Mark says you should not do, I did when I started. So I used to advertise on Craigslist, offering to price match. Can you believe that? In my website, I used to use keywords like affordable and cheap, thinking that that would get me SEO and make me competitive. I had very slow growth for those first few years. And the clients that I was getting were not quality clients. And it reached a point where I felt like I wasn't being paid enough to make it worth my time to get out of bed and open a file. So something had to change. So I first came across Mark at around 2017. I started to subscribe to his email newsletter. I used to attend his free monthly webinars. I will catch his YouTube videos. And I started to get a pretty good idea that value pricing was the way to go. I was leaving so much money on the table. Yes, I created packages, but I was not creating them correctly. And then I was putting my prices on the website, which I've learned since is a big no-no. So while I did a lot and I got to implement a lot of things from the free materials, it wasn't until 2019 when Mark released the How to Price Bookkeeping course that things really changed in my business very quickly. I bought the course, and because still at that time, my business was very small, so it was a big investment, I made the commitment. I've got to get my money back. So I carved the time out. That first session, it was live 90-minute sessions, so I booked it in my calendar so I could attend live, because I knew that if I didn't catch it live, it's easy to procrastinate in catching up with the recording. And I was taking notes, but I didn't stop at taking notes. I then made it a point to implement something. I am happy to report that before I finished taking the course, the changes that I made paid for the course. So that was my big wow moment of, we're up to something here. This is what I should have been doing all along. And that gave me the motivation to keep making the changes.
Well, I started my bookkeeping journey in the mid-90s. My family had a business and I was bookkeeping for that company, and that led me into other companies. So I started my own little bookkeeping business, but I knew my pricing was wrong and I needed to fix it, and I didn't know what to do. I wasn't making any money, I wasn't going anywhere, and I knew I was doing something wrong. I'd moved to cloud software, but I knew that something wasn't right. So I reached out to the Canadian Professional Bookkeeping Organization and had a few roundtable discussions with them, and they said, I'm like, what am I doing wrong? Like, I'm pulling out my hair, I'm working so many hours and I'm not getting paid. What's going on? What am I doing wrong? And they said, you're doing everything wrong. You need to talk to Mark Wickham, and you need to be a part of some different organizations. So I started doing some research and started watching all of what you had available via Facebook or YouTube, and realized that this was where I needed to be. So I quickly joined your Value Pricing Academy and then made some changes, took some action, and now I've tripled my revenue in 6 months. Not even 6 months. I tripled it in overnight. It was an amazing feeling now that I actually have some money to be able to invest in my company, invest in myself. So I've just become limited, and it's just still me, but I've got lots more to learn. So I'm still in your academy, and I'm going to do some more business advisory, but I need to get my packages organized, and that's my first number one of what I need to do. I think that we are so conscious of pricing, and I was scared to charge too much. That's when I joined the Canadian Professional Bookkeeping Organization and got a hold of you, and I'm so grateful. Well, I went into your effective pricing, and I went to the bookkeeping special module and put all the parameters in there and came up with a price for each individual client that I have. And I spoke to my clients and said, I gave them forewarning, your prices are going to increase and I'm worth it. And they were all, yep, you're worth it. We know it. We've been underpaying. And yeah, you're not going anywhere. You're going to stick with me. So some of them I tripled, some of them I doubled. Yeah, so it's been really, really good for me.
My name's Neil. I'm based in a small town called Weston-super-Mare, which is about 25 minutes southwest of Bristol in the southwest of the UK. Prior to starting my business, I've had no accountancy practice or accountancy firm experience. So what I think I wanted to do as I got further into my career is that I wanted to help people, but kind of in my own way. I started my business back in January 2020 with kind of that being a sole mission, really. I think I found about you, Mark, probably via social media around the middle of 2019, and I jumped on board some of your free webinars and content, and I've seen you speaking at a couple of events as well. And I just, with my business being kind of a bit of a sideline and a bit of a pipe dream at that point, I had the mindset that said, right, well, this is the guy that I need to really follow, because he's talking about pricing and marketing, two areas that I have no idea of, and that combined with the personality, I thought, this guy's really super cool. And so, when I lost my job in January 2020, and I made the decision that I was going to really attack this full time with no other household income. I was earning probably about 20% of my previous job's income, not enough to pay the bills, not enough to pay the mortgage, to feed the family. So I thought, right, I've got to do this. Mark's the guy. Mark's the guy. If I'm going to make this work, Mark is going to be kind of the partner in crime that I need by my side to kind of help me to learn these things. When I went full time, I think my recurring revenue was about £700 or £800 a month, and that's probably being generous. And I set myself a target of £100,000 turnover in year one. There's no reason for that. I just thought it was a nice number that I'd quite like to achieve, and I managed to do that. I managed to hit £100,000 turnover by Christmas last year. The more I can achieve these targets, then by default, the happier that I'm making people, because I'm dealing with more clients, and more clients are giving me amazing feedback, and that's leading to referrals and more people viewing my content and more clients. So it's kind of it's that circle of if you do something good, then it will pay for itself for multiple times over. I still pinch myself literally every week, and I take each week and each month as it comes, never take anything for granted. Coming from a position that I had nothing, and I've been very fortunate. Hopefully I can continue to grow and be a part of your amazing academy, Mark. That's I've met some really interesting people through it, some peers, people that are really decent friends now, whether they come from Canada or South Africa. And it's really cool that we're all in the same boat, all trying to get to the same place.
Hey, welcome. We are about to go live. Oh, we are live. We're going officially live starting in 5 minutes. But as many of you know, I always start a little bit early just so I can welcome you. So hopefully all the technology is working okay and you can hear me all right. So let me know where you're from in the comments box. Let me know if you've never been to one of my live sessions before. type new, just type capital letters new into the comments, and I'll give you a special welcome, special shout out. I think there's lots of new people here because I don't recognize all the names, but I do recognize first person to comment on YouTube was Lisa from Sussex, who I know very well. She's in my academy, and it's Lisa's birthday. So happy birthday to you, Lisa. I think she's actually somewhere. Here we go, Lisa. So she's here. Who else was here early? Wendy Woolmore was here. Wendy Woolmore was here early, and also Camille Collins was here early before we actually went live. But let me see who else is here. We have Carl. Hi there, Carl. And Carl is brand new to never been to one of these sessions. So Carl, great to have you here. We are going to be starting prompt at 5 o'clock, but let's see who else we've got. We have Colleen is here from North Bay in Ontario, Canada. Hi there, Colleen. Great to see you. We also have Clive is here. Hi there, Clive. And I know that we'll be on virtual stages later on this week together. Clive from Ireland, good to see you. My good friend from over in Longview, Texas, Philip Sinclair is here, part of the Academy. So I see Philip regularly on my sessions. Great to see you. I mentioned Wendy earlier. Wendy Woolmore is from Fort Erie in Ontario. Denise Owens is here from Alberta in Canada. We have lots of Canadians. Maha's here again from Connecticut. Great to see you again. Another familiar name. We have Donna is here from Sherwood Park in Alberta. Welcome to you. A few people did say the download wasn't working for the workbook, but hopefully it's working now. There's some new links just been put into the comments box. So far, everyone seems to be commenting from YouTube, so let me know if you're on LinkedIn, and I'll give you a special mention. We have Brian is here from New York, from Brooklyn. No sleep till Brooklyn. Hi there, Brian. Another familiar face is Wendy. Great to see you, Wendy, from Red Deer. And we also have, let me move forward. We've got a few links here. Okay, Crystal Williams is here from Houston in Texas. Great to see you. We have over in Vancouver, we have Enley. Great to see you. I know we've had a few chats on LinkedIn recently, and you've just joined the Facebook group, so great to see you here, Enley. We also have as well, Lucy Ryan is here, who's new and willing to learn. So welcome, Lucy. We have from, I think this is someone else from Woodstock in Ontario. I'm sure I've done Woodstock already. We have Linda is here, Linda Barney. Hi there, Linda, who's part of one of my academies as well. We have, I might pronounce this wrong, not the Neil bit, that's okay. Neil Evans, hi, from, is that Cobo Conk in Ontario? I've never come across Cobo Conk. What a cool sounding name. I wonder if anyone else here has got a really cool sounding name of a place they're from. Let's see. Tarian's here from Kawartha Lakes in Ontario, Canada. It's lots of Canadians, which is awesome. We are going to start, if you've just joined, by the way, we're going to start in just over 1 minute. And weren't those videos cool if you were here early? There were some amazing stories. Did you catch the story of, it was Melanie, when she said that she's been doubling and trebling the prices of some of her clients. So if you missed that, we actually start early, quarter of an hour beforehand, with some videos playing, with some people doing some amazing stuff. We heard from Melanie, we heard from Neil earlier. You'll meet Neil again. And we also heard from, I think it was Jessica. Okay, we also have from Maryland, we have Jen's Bookkeeping and VA. Hi there. Welcome, Christopher. Never been to one of my sessions before. Welcome to the Business Advisory Masterclass. If anyone's wondering how to get the download, like Lucy, my team, Sarah and Gabby, and I think Emily are here. They'll be answering questions. Look for through the comments box. You'll find links to things like that, Lucy. Okay, Claire is here from Hereford in the UK. Not too many from the UK yet. We have Melissa here, who's never been to a session before, so welcome, Melissa Burton. From Winnipeg, we have Myrna. I think we've mentioned Christopher already, but he's from Los Angeles. Kitten is here. Hi, Kitten. You've never been to a session before, so a big welcome to you. And I love this one. Tina Green, I'm so excited to learn today, from Alberta in Canada. Sid is here. I think Sid, I'm glad you're here, Sid. I think you were looking for the link earlier, but you are here, which is great, from the US. Kitten is from Portsmouth in the UK. Glenn is also new. Welcome, Glenn Godowski. Is that pronounced right? Edmonton, Alberta. We have Jennifer is here. I'm going to have to hurry up because we are supposed to start. So I just want to make sure I have not missed anybody out. So we have William is here. Ali is here as well. Brand new from Myrtle Beach. I don't know what the name is, but it's got Best Fonzie here, so we'll go with that for now. Linda is here from Orlando. Hi, Linda. Good to see you again. Patty from Colorado. Jessica is here. Jessica, you saw a video earlier. Jessica's in the Value Pricing Academy doing some amazing things with pricing. She's now doing some of the training sessions in the academy. And my good friend from the UK, John Johnson, who I've known for many, many years now. Hi, John. Good to see you here. Richard Sadler is here. Hi, Richard. I know you're in the academy too. Jennifer from Apuhaki. Is that right? Jennifer Apuhaki. That's a good one. That will challenge me. Annick's here. Hi, Annick. Great to see you again. It's been a long time since we last saw each other in the US. Stacy is here. Oliver's here as well. Faith is here. Older. I'm going fast now because we should start. Amy Larson's here. Hi, Amy. Nassos is here. Ashley is here. Charlotte Derbyshire. Hi, Charlotte. Good to see you again. And okay, Glenn's got a great sense of humour as to names of places. And actually, one of my favourite people from Saskatchewan is part of Saskatoon, so that's a cool place, Saskatchewan. Cruise Crazy, hi, Ed Collis here. No, there's many, many more. I could keep going, but we need to get started. Okay, so let's do exactly that. It's just past the hour. Lots of people say to me in the Facebook group, said, Mark, how long do these sessions last? And the answer is always, I have no idea. Because we have 3 sessions, 3 days together. We have a huge amount of content. I want to deliver as much value as possible. This is a huge topic, as you will see. We can only scratch the surface. I want to get into the content as soon as possible. And so I typically teach for, I don't know, usually 75, 90 minutes, but then I answer questions. And my goal is to answer as many, if not as all the questions I can. I'll tell you how you ask questions in a short while. And we'll deal with questions later. So let's get started. Now, one of the things that we do, and many of you know this because you've been to a lot of my live sessions, is we want to help make the world a better place. And so one of the things we do is we make a contribution to a project on all of our live streams for every single person that attends live. We do it through the B1G1 organization, which is amazing. I know many of you are now part of B1G1. And what we do in the Business Advisory Masterclass, we pick 3 particular projects, 1 for each of the days, and then we make a contribution on your behalf to help make the world a better place. So very quickly, what are those projects? So as a thank you for being here live today, one of the things that we will be doing is we will be, for each and every one of you, providing a week of access to clean water to people. Apparently almost a third of the world does not have access to clean water, which is tragic, really, because for us, we take it for granted. We just turn the tap on and there it is. So for each and every one of you, we will be making a contribution later on today to give a week's worth of access to clean water. And tomorrow, what we'll do when you show up live, we get the numbers reported and we'll tell you how many weeks, how many days worth of that we've collectively contributed this week. When you come tomorrow to the Wednesday session, our focus switches away from health to another of the UN global goals, which is education, parts of the world where children just do not get an education. So when you come tomorrow, we will be providing a day of education for a child somewhere in the world. And then on Thursday, when you come along, our theme for Thursday is climate, which is a big issue right now. And so when you come along on Thursday, for each and every person here on Thursday Live, we will be planting a tree in the world. Okay, so when you come to these live sessions, you will help making the world a better place. Thank you for being here. And if you don't know what B1G1 is, we can talk about that another time. It's an amazing amazing project, which I know my friends Paul Dunn and Steve Piper are very much behind that. Okay, so today and this week is all about business advisory. And one of the things that I've done this a few times now, in fact, several times now, I've been running this masterclass. And over the last few years, I've used a phrase which I didn't think I'd carry on using. I thought I'd change it, but actually it's still really applicable right now. And that is this. I think a theme for this session is really about reinventing, because, and what I mean by that is that, and I first used this phrase a couple of years ago because, not a couple of years ago, 18 months ago, when things changed in the world with COVID and lockdown. And I remember back in April of 2020, April last year, a lot of people were really worried. Both accountants, bookkeepers, and their clients really worried about the impact on their business. And it would be nice to say that's all behind us now, but unfortunately it's not. There's now, is it a fifth wave, I think, picking up with this new Omicron. There are some countries going down to lockdown in Europe, for example. Austria, the Netherlands have now instigated quite severe lockdowns. The UK have announced new measures. Portugal have. And so there's panic and uncertainty again. And so this is a time where arguably your clients need you more than ever before. They need you because there is this uncertainty in the world. There is this uncertainty as to, what will our business look like 6 months from now? Will it still be here 6 months from now? People are worried. Your clients are worried. And this is where we can step up. We can raise our game. We can reinvent ourselves personally to start to acquire new skills so that we can better help our clients run more successful businesses. And we can then also help our clients to reinvent their businesses. And we've been seeing this for the last year or so now, for the last 18 months. I've come across so many businesses that have been forced to change, that have made some changes. And very often, I keep speaking to businesses and to accounting firms that have said, actually, the last year and a half since the COVID pandemic has been the best 18 months. Because many of us are changing the way that we work. We're changing the way and embracing and capturing the opportunities of, for example, technology, being able to work from home, perhaps, change our cost structures in our business, communicating with people in a different way. The world's changing fast. And this is an opportunity for you to really step up and be the hero in your communities, reinvent yourself, reinvent what your firm does, and start to focus much more on helping your clients be more profitable, be more sustainable, be more valuable, and have more better businesses with better cash flow and so on. So that's really what these 3 days is about. It's about shifting our firms, and it's not about ditching compliance work, because compliance work is here to stay. Compliance work is still important, but we need to be shifting towards being the business advisors, helping our clients. So for those of you brand new who have never met me before, just very briefly, my name's Mark Wickersham. I am from the UK, but actually I moved out in the middle of lockdown last year. Sarah, my partner, and I, we moved to Portugal. So we're in Portugal right now. Same time zone as the UK. And I've been in this profession now for over 30 years. I entered the profession way back now in 1988, went to work for a large multi-partner firm in Sheffield in the UK. Spent 3 years on a training contract, qualified as a chartered accountant. So I'm a qualified chartered accountant. I then spent 3 years specializing in tax, income tax and corporation tax. But then a few years later, in May 1996, I set up my own accounting firm. I had no clients. I just had a spare bedroom. I bought a desk, bought a computer, and started to grow my firm. It was May 1996. Exciting times for me. And something seemed to work because I grew very fast. I moved out of my spare bedroom into my first offices just 2 months later. In July 1996. I also hired a team of people. I hired my first 2 juniors. I had a secretary and grew. I grew from no clients to over 200 in just over 2 years. I outgrew my first premises after 15 months and moved into bigger premises. The team soon grew to a team of, there were 13 of us. In fact, this is actually an image of this is me looking very young in the middle. This was probably from around about 1998 or 1999. We'd just been awarded Investor in People. This was my team back then, outside of our offices. And it might sound like I was a huge success story, and the answer was I absolutely was not. I made so many mistakes in those first 2.5 years, crazy mistakes that made life hard. I found that by the end of 1998, I was working crazy long hours just to make ends meet. I was working hard just to generate enough fees to pay the team. The team did very well, but there wasn't much left for me. And I hear from other accountants, bookkeepers, that similar stories over and over again, that we grow our firms, but there's not much left for us. So I just found I was working harder and harder. That all changed for me in November 1998. In November 98, I met someone called Steve Pipe in the UK. Some of you have heard of Steve, and he's now retired. I went on the 3-day Accountants Masterclass, and Steve shared with me over those 3 days a better way of running an accounting firm. It was life-changing. It had a huge impact on my mindset more than anything. So 1999, I started changing my firm. And the single biggest thing that I got out of the masterclass in November 98 was Steve was spending, it was a 3-day event, and a lot of the 3-day events was the 3-day event was talking about how we can move from just doing compliance work. And at that time in my firm, I was predominantly doing annual financial statements, bit of bookkeeping, payroll, tax returns, corporation tax compliance issues. And the only other things that I did that was not compliance was, because of my tax background, I did a lot of tax planning. I think in the US you call it tax advisory, helping people pay less tax, was really the only exciting thing I did. The rest was processing tax returns and doing financial statements. And so in 1998, Steve shared with me and other people in the room how we can help our clients build more profitable businesses, give our clients advice to help them overcome their challenges, to create more profit, to improve their cash flow, to grow their sales, to become more valuable. And this was something that really hit me, because I thought, this sounds exciting. I've never ever done a set of financial statements before, or a tax return where the client said, "Oh, thank you so much, that was awesome." And yet here was a chance for me to do something different. And so by the end of 1998, I did my first advisory service using some tools that Steve shared with me. And over the next few years, 99, 2000, 2001, I stopped doing compliance work. My team started doing the compliance work. I had other people that did Steve and Jonathan, for example, my client managers, did the compliance work. I just did advisory work for the next few years. And I loved it because it was making a huge impact on the lives of my clients. I had clients saying thank you. I had clients sending me testimonials, case studies. And also, so I was making a bigger difference to the lives of my clients. Sometimes they were struggling in business, and I was helping them through that, through advisory work. Now, I then went to, in 1999, I was so fired up about this whole idea of advisory work from Steve that I then decided to go on the 4-day accountants bootcamp in June 1999, where I then met another person who's now one of my heroes. Some of you know Paul Dunn. Paul Dunn ran the bootcamp. He's now a good friend of mine, lives in Singapore. It was his birthday, I think, today. So if Paul ever catches up on this, happy birthday to Paul Dunn. And likewise, Paul also talked about how we can be different, how we can make a bigger difference to the lives of our clients. So that's what this is what this 3 days is all about. It's about how do we transition, how do we be more confident with offering advisory services. And I'm going to be talking about all aspects of it. I'm going to talk about how would you package it all up? What is advisory work? We'll look at the definition. We'll look at how do you sell advisory? How do you price it? And how do you do it? How can you win more clients when you are doing advisory work? And ultimately, what you're going to learn is how can you help your clients more, be more valuable, and at the same time you get better paid, better rewarded for doing more valuable work. That's essentially what these 3 days are all about. Okay, a few, before we dive into the first section, a few admin things. First of which is, as you've seen, the chat box goes absolutely crazy. And so if you have a question for me, and Taryn knows exactly what to do here. Let me just share. What you need to do is in the chat, use the comments box, the chat box, the comments box, and put a big QQ in front, and then ideally at least one, if not two of those question mark thingies, because that way I will get to see it. So Taryn has done exactly, she's been before, she knows. Because I can see that, I can see as all the comments are scrolling past, I can see the QQs quite easily. And so I can answer them. And so, Taryn, I'll answer your question now. Is this going to be available to watch later? I've got my toddler with me, so I'd like to. Taryn, and for anybody else, we are recording this. It's live streamed to my YouTube channel, and we will leave the recordings on the YouTube channel for a few days. In fact, I'll come on to that point because it's one of the things that I do need to cover. But right now, yes, it's being recorded. Okay, so some of the other things I need to tell you about. Yes, please ask questions, ask away, put QQ in front, and then what will happen is my team will answer some of them. If they're questions like, can't find the workbook, where is it? My team will help and reach out to you. So just ask via the comments, and I will be answering questions at the end. Sometimes I answer them when they pop up, but usually at the end because, as I said, the comments box goes crazy sometimes, and I miss stuff. I'll just get distracted if I deal with questions in the middle. But one thing I would like to, please do, of course, use the comments box. Please, I will read all the comments afterwards. My team is reading them, so please do put comments. And one of the things I'd love to know is if you are here and you're already in the Value Pricing Academy, or the Bookkeepers Pricing Academy, or any of my academies. If you're in one of my academies already, let me know. And let me know, because I'll read the comments later, let me know how it's working for you. What are the sorts of results that you're getting? So please just share in the comments if you are in one of my academies, so I can see and read later how you're getting on, what sort of results you are getting. Now, we've got 3 sessions together. We're going to cover something like 4.5, 5 hours of training, plus probably a couple of hours or 2 or 3 hours of questions. We've got roughly 7-8 hours together over the next 3 days. And we're going to cover a lot of stuff, but there is so much more that we could cover. And I know that there are some people here that really want to take action, get results by winning clients for advisory work, being able to build a profitable advisory solution. And so for those of you that want to move to the next level, one of the things that we'll be talking about later and more so tomorrow and Thursday is how you can then work with me at a deeper level. And I'll tell you something about the Profit Academy, Advisory Academy later as well. This is something that's brand new. Some of you do know what it is, but there is an opportunity to get some very special access to the Profit Advisory Academy. I'll tell you more about that later. So if it's okay with you, later on today, I will share with you how you can get access to the Academy and an opportunity for you. Okay, of course, I'm going to share with you lots and lots of ideas and frameworks over the next 3 days. But one of the things you'll find, and if you watch some of those videos at the start of people like Jessica, Melanie, who doubled, trebled some of her fees with some of her clients, people are getting some extraordinary results. But please don't think there's a magic button. There's no magic button or magic pill that you can take that's going to solve all your problems and make this happen. All of the things that I'll teach you today, the frameworks, the ideas work, because I've got so many people. I've been working with accountants and bookkeepers now since the year 2000. So over 20 years, this stuff works. I know it works. I have hundreds, if not thousands of stories. We might look at some later of people doing this stuff. But you have to make it work, okay? There's no magic button. You have to do the work. You have to take action. And one of the things I find is when people come along to my live sessions, my trainings, they tend to fall into one of two camps. There are those people who are the note takers. And the note takers are people who take lots of notes, and that's a great thing to do. You absolutely should take notes. So please do take notes during the course of these 3 days. There are those people that are note takers. But then there are people like those that you met on the video earlier as the intro music was playing, like Jessica Fox, who's here, Melanie, for example, and Neil Criddle, who are people who don't just take notes. They then go away and take action. They're action takers. You see, there are note takers who can't go along and they do learning, they go to conferences, they go to webinars, they take lots of notes, but then don't do anything and then wonder why nothing changes. It's the people that get huge results, that see their firms changing, that get improvements in their profits, have more fun. It's as a result of taking action. It's taking action. And so I'll remind you of this at the end of each day as to what action are you going to take. And I encourage you that as you're taking notes, please draw some big circles or whatever it might well be around the things that you are going to do immediately. And I'm going to encourage you at the end of each of the 3 days to pick one thing and do it. So my question for you is, and I'll ask again later, are you a note taker or are you an action taker? It's the action takers that get success. It's the action takers that change the world. Now, going back to the question from Taryn earlier, these sessions are being recorded and they are being live streamed. They are being recorded. The recordings will be available for, I think it's 5 days. The recordings will be available until Monday at 11 a.m. Eastern Standard Time. And then we take them down. Because we do this every 6 months, we take them down. Why do we take the recordings down? Well, the big reason is this. I'm going to encourage you to be here live. Come along live to each of the 3 days. And the reason for that is because when you're live, you can comment, you can ask questions. I can answer your questions when you're live. I also have a bonus for you tomorrow when you come live, and you'll help make the world a better place. But actually, the most important reason for being live is because those people that say, do you know what, I'll just wait for the recording, I'll watch the recording. And we say, someday I'll watch that recording. Well, the problem is life gets in the way and someday never happens and we never get round to it. When you commit to being live, you're going to get the value from these sessions. So I encourage you, please come along to the live sessions. Please comment, please ask questions and be involved in the whole 3 days. If you can't make all 3 sessions because you've got a commitment or something, then of course you can watch the recordings any time between now and Monday. So block some time out to do that, but better if you are here live. Now, of course, it is live, and sometimes things go wrong. We did one of these masterclasses. I think I do one called How to Price Bookkeeping, and I think it was when we ran that start of last year. One of the sessions, we had a power cut in Portugal. My camera disappeared, everything disappeared, and it was crazy for a bit, and we panicked a little bit. Fortunately, it came back fairly fast, and we got back up and running again. We had to actually run that one as a new live stream. So if anything goes wrong, and everything that can possibly go wrong has gone wrong at some point in time when I've done live sessions, if something does go wrong, don't panic, just look at the comments box. My team are here to support me. If something goes wrong, we'll put messages in the comments box. So just follow the instructions from my team if that happens. Okay, now make sure you have got the workbook. You'll want the workbook. It's a great place to take notes. There'll be the workbooks in the Facebook group where you can download it. My team have also put it into the comments box. This workbook covers the entire masterclass, so I strongly recommend you grab that. It's a great place to keep notes, so you keep all your notes together. Not only that, as you can see from some of the screenshots here, we're going to go through today and tomorrow. We're going to go through a little case study and look at some numbers. And whilst I'll put them on the screen, you'll probably want to have a proper look at them. So there's a lot of stuff in the workbook that you'll find really useful that will support you over these 3 days. So make sure you have grabbed that, and if you've printed it out, you can then make notes on it. Okay, so today, here's our agenda for the day. Today, we're going to look at really three areas. We're going to first of all look at what is advisory. What is business advisory? We'll start with a definition, and we'll also look at how do you spot the opportunities? How do you look at a client's financial statements and be able to understand what's going on and spot the opportunity for doing advisory work? So we'll look at that first. Then what we'll do is another question that I get very frequently is, what do I sell? What would I do as part of an advisory solution? How might I package it up? So we're going to look at this whole idea of creating packages. I'm going to talk to you about something called the journey process, the journey technique for creating your packages. And then the third thing we'll look at today is we'll touch a little bit on how do you communicate value? How do you get the clients to see the value of what you do, of what advisory is? And this is a big issue. It's one of the most common challenges people tell me because clients have never bought advisory work before and they don't know what it is. And one of the things that's stopping us being able to sell advisory is because the client doesn't see the value. And they don't see the value when they don't understand what it is for them, what's the benefit for them. So we'll look at the communication piece. Now, tomorrow is the most content heavy area because we go deep into two areas tomorrow. So make sure you don't miss tomorrow because we're going to look at how do you sell advisory work without all that uncomfortable selling? How do you sell? What's the process for? And I'm going to share with you a framework and how to get people excited about your advisory. And the other big question I get is, okay, so a client says they're interested, they want to buy. How do I price it? So we're going to go really deep on pricing tomorrow. So selling and pricing tomorrow. And then Thursday, what we'll do is we'll look at then, okay, we've got a client interested. So what do we do? How do we deliver advisory work? So that's the main theme of Thursday. And we'll also look at as well, now that you're doing this work, how can you use it to attract new clients, high quality clients? We're going to look at the marketing piece on Thursday. So we have a huge amount to cover, as you can see. So let's start with the first thing. What is business advisory? And I think it's a name that I think sometimes it's been thrown around a lot over the last few years. A lot of people are talking about it's one of the buzzwords in the profession that we must be doing business advisory. But the question is, well, what is it? What is it? And I see it as being this. It's about giving advice. Giving advice, as simple as that. It's about giving advice, but more specifically, it's about giving business advice. Giving business advice. But that's such a broad topic, so we need to kind of drill down a little bit more on that because that could cover all sorts of things. That could cover tax advisory or tax planning. I think more specifically, what advisory is all about, business advisory is predominantly helping clients to build a more successful business. And where I see the biggest opportunity for us is helping our clients to make more money, to increase their profits, grow their business, their cash flow. Because when they increase their profits, their cash flow is going to change and improve. When they increase their profits, it'll be a more sellable, more valuable business for that point when they then want to exit. So for me, business advisory is predominantly about helping people build a more profitable, successful business. One of the key criteria, I think, for business advisory, and sometimes people talk about business advisory, sometimes they talk about consulting work, and I see that the thing about advisory work is the way that we should be doing it is recurring work. Now we can do, and back in 99, 2000, I did a number of consulting projects for clients where they were for a finite period of time, where they pay me a fee, I do some work, and in some cases I did two big projects where I got paid £29,970. That's about $40,000 for a 12-month program where over 12 months I did some structured things. And that was great, highly profitable. The only problem with those sorts of things is once you've finished, you're finished. And so the thing about business advisory, the way that I recommend you structure it is it's actually recurring. It's recurring. That what you do is you work with the client, you give them advice every single month. And we're going to focus over these 3 days on how you might structure that so it's a recurring revenue stream. And what makes that exciting, of course, is that once you've got a client saying yes to you, saying yes to your advisory service, then as long as you keep delivering value, they'll keep paying you. So advisory should be, I would suggest, recurring work. And that's a big opportunity for you because recurring work will help you build a more predictable cash flow in your firms. You become more profitable and more saleable, the more recurring work that you can create. So going back to this question of then what is business advisory? It's about helping clients increase their profit, building more successful business. It's recurring work. But also, I think that advisory work consists of ideally 6 key areas. There should be 6 things that you deliver as part of an advisory solution. You might not necessarily deliver all 6 of them, but I think a complete solution, a complete service will have 6 key areas. So let me run through what those 6 areas are. So first is advisory work needs to have an element of goal setting. Because if we're going to work with our clients, if we're going to help them to build a more successful business, then we have to understand first, well, what does success mean to that client? What does success mean? Because everybody has a different definition of success. So to understand what success means to the client, we need to understand what their goals are. What are their business goals? What do they want their business to look like? When do they want to sell their business? How much are they looking to sell their business for? We need to understand their goals for their business. And also, and arguably even more important, is we need to understand what are their personal goals? What do they want out of life? Because only when we know what we want out of life can we start to build a business that will get us there, that will give us the life that we want. So when you're offering a business advisory service, there should be an element of focused on goals. Okay, second thing. The second thing that you will have within an advisory service is strategic planning. We should be helping our clients with their strategy. What does that mean? What does that mean? Many years ago, I went to Durham University Business School in the UK, and Durham University, one of the leading universities, is well known for being probably the best university for MBAs and learning about strategy and so on. And one of the professors there gave a series of definitions of what does strategy mean. And there were dozens of different definitions of strategy. But I remember very clearly, he shared with me at the end, let me share, he said, what my favorite definition is. And this is what he said. And this makes, to me, so much sense. Strategy is simply, what do you need to do to get from point A to point B? Where point B is wherever you want to get to, which is the goals. What does the client want their business to look like? That's the point B. That's where they're aiming for. And point A is, where are they right now? What are the challenges they're facing right now? What are the problems they're facing right now? And so strategy is really about understanding where are they now, where do they want to go to, so what are the things that they should do, what do they need to do in their business to move away from the challenges, the problems they're facing right now, and move towards the goals that they want. That's strategic planning in a nutshell. The third thing that I think is an important component and something that's our comfort zone is reporting. Sometimes I used to call business advisory, when I was running my accounting firm, I called it management reporting. It was the same thing, management reporting, business advisory, you could use the terms interchangeably, but that's because for me, I see that the reporting is a key part, a critical part of what we do. Because we are experts in numbers. We understand the numbers better than anybody else. We can look at the numbers in a balance sheet, a profit and loss account, and it makes sense. At least it should make some sense to us. And so one of the things that we should do is recognize that most clients, most business owners cannot read a balance sheet and know what it says. They do not understand what half the things are in the profit and loss account. They have no idea. They often wonder about, well, why does it say I've got profit? Why do I have to pay tax when I'm running out of cash and I've got an overdraft? They don't understand all of these things. And so one of the ways that we can add value is reporting on a frequent, regular basis on their results, on their numbers, but in a format that makes more sense to business owners. So that may be that we produce once a month some reports that might include some graphs and charts. They might include some ratio analysis. They might include some explanation to go with it. They might have some color and some trends and forecasts and so on. So a key part of what we do is making sure that we are producing information that makes more sense to the client. Okay, fourth element. A fourth element is not essential, but I think it is as part of a more complete solution, is forecasting. Business advisory. I've ruined it. Business advisory would include an element of forecasting, because if we know what their goals are and where they want to go and where they are right now, one of the things we need to look at is, so what do we think? What do we think based on their growth plans are? What impact might that have on cash flow, for example? So forecasting is something that's a key component of our advisory work. Okay, next, and this is really important, we should also give some advice. It's not just, oh, here's your reports that we've done with some graphs and charts that you may not understand. It's about the advice. And so one of the things that I found about advisory work was you got to build the relationship with the client, because you would meet the client on a frequent basis, typically monthly. And once a month, you deliver the reports. You'd perhaps update the forecast, and you then give some advice. You would help them understand the numbers, interpret them. You might ask them some powerful questions to help them better understand what they need to do to improve the numbers. You might even have some solutions, perhaps. So it's about the advice. It's about meeting with clients on a frequent basis. And last, but certainly not least, is a complete advisory solution should have an element of accountability. What do I mean by that? So an advisory solution might be that you produce some reports. You then meet with the client once a month to talk about the reports, to explain the graphs, the charts. You might ask some questions to see what challenges they're having right now this month. Are they on track to reach their goals? And so on and so forth. And at the end of a conversation with the client, at the end of your monthly meeting, one of the things that will happen is you will create with the client some form of action plan. In other words, at the end of the meeting, the client might say, okay, so these are the things I need to do. I need to put in place a referral system in my business. I need to revamp the pricing on my website. Whatever it might well be, they will come up with your help, a list of actions. And an action plan should always be, that's the most important end result of a meeting with the client. Your ongoing advice, your meeting should be all about helping the client come up with an action plan for what they need to do next to move to the next stage of their business. So what do I mean by accountability? Well, the action plan may well be really, really valuable. But what I found when I was doing advisory work with my clients is I would often find I'd meet with them the following month and I'd say to them, so Terry, tell me, we said we'd do you'd work on these 5 things when we last met a month ago. How are you getting on with them? Do you know what? I've been that busy. Some things have happened. I had a problem with a customer and I got sidetracked and I haven't really done any of those things. Have you ever had that situation? It may be perhaps you're the same as well. Possibly you've been somewhere, you've made an action plan, a list of things you're going to do. You've been to a webinar, for example, and you've made this list of actions you're going to take. You have all these great intentions, but somehow it doesn't quite happen. So one of the things that we can do to add value to our clients as part of an advisory solution is to help them take action by helping them become accountable. In other words, at the end of the meeting, you might, for example, create an action plan with the client. And then what you might do is 1 or 2 weeks later, perhaps you jump on a quick Zoom call. It could even be just an email you send. and you just say to the client, when we got together the other day, you said you would do these things. Tell me, have you done them yet? You promised you'd do this by the end of the first week. Have you done it? And if not, let me know and ask if you need any help. You see, having somebody else just simply nagging them, telling them, reminding them of what they promised to do, what will happen is they'll think, I did promise that. I need to go away and do that. I tell you what, I'm going to do that this afternoon. Don't underestimate the value of you simply holding the client accountable. Okay, so those are the 6 things that I think that in your advisory service, your solution will consist of some, if not all, of those 6. That's essentially what you would be doing as part of advisory work. Okay, so what we're going to move on to next is, we haven't got the definition out of the way and those components of advisory. We're going to look at how to spot the opportunity to help your clients. And what we're going to do together, and if you've got the workbook to hand, this is great. We're going to run through a little bit of a case study, and I'm going to talk about a little bit about how you can, what to look for in numbers, what some of the things you want to do so that you can then spot when things are perhaps going wrong in the business, or spot opportunities to help a client. So I have a case study in the workbook. It's a water jet cutting business. It's called Jeremy's water jet cutting business. The owner is called Jeremy. He's had the business for 10 years. He's been in business for 10 years. And you've just summarized, it's in the workbook, you've just summarized the last 5 years of financial information. There's the balance sheet and the profit and loss account. I'll put them on the screen in a short while. So we have some information from the last 5 years of his 10 years. One of the things you learn, you know because you perhaps did the financial statements possibly, but one of the things you know is that in year 8, so 2 years ago, Jeremy needed to buy a brand new water jet cutter. And it cost him $300,000 to buy that. He financed it with a 5-year loan of $200,000, and the other $100,000 was cash. So that was a big event that's happened in the last few years. Now, the reason I chose this particular example is way back now when I ran my accounting firm, I actually had a client that I did some advisory work for. His name was Mark, same as my name, and he ran a water jet cutting business. So I remember it was fascinating when I first took him on as a client, because I had no idea whatsoever what a water jet cutting business is. And what was fascinating is, if you have no idea, it's in the engineering sector. And Mark, when I went to his premises, he had basically a tin shed. It was like a warehouse, little factory. It was a tin shed, and in there was this water jet cutter. And he showed me it and told me how it worked. And essentially, it just fires out water, like in a hose pipe. But it's so fine, this water jet, and so fine, and therefore the pressure is so high that a water jet cutter, what it was designed for was to cut out sheets of steel. Okay, so water cutting out steel. That's essentially what the business was. So we've got an example of, I've used that as an example. It's based on a real client I once dealt with many years ago. So if I just pull up on the screen, and if you've got the workbook, then you'll see all of these numbers in the workbook. That's why you want it to hand. So if you look at the last 5 years, you'll see the balance sheet. I'm not going to go through this in detail. You can have a look at it later afterwards in some detail and see if there's things that you spot. I'm just going to give you a few techniques, a few ideas. But one of the main things you'll see as you look at the balance sheet is in that year 8, you'll see that he bought that new water jet cutter for $300,000, and after depreciation, you've got a big jump. You've got a big jump there in fixed assets. There's no cash anymore because he used the cash to buy the water jet cutter, as well as some long-term debt, which you'll see halfway down the page. So that's the balance sheet. If we flick to the profit and loss account, then what we see here, you can see his sales over the last 5 years, the direct cost, the gross profit, and so on. One of the things you'll notice is because of that big transaction that in year 8, depreciation jumped because now we're depreciating his water jet cutter, and also he's now paying interest on that loan. So they're the numbers in the financial statements, and one of the things that we need to do is to be able to look at that sort of information so that we can help the client, we can give them advice, we can spot opportunities of where things are perhaps going wrong, and we can have a meaningful conversation with them to give them ideas, help them to achieve whatever it is they want to achieve, their goals. So let me share with you a couple of powerful techniques and things that we should be doing when we are faced with numbers like that, when we're faced with the profit and loss account and the balance sheet. You'll see, by the way, that in the workbook there is another table of numbers. We'll come to that later. So for now, we'll just look at the balance sheet and the profit and loss account. And the first thing that you want to do, the first thing is that whenever you see numbers like that, you want to do some trend analysis. Just look at the trends and see what the trends tell you. Trends are a great starting point. So if we take, for example, if we take sales from the profit and loss account, you would see for that particular business, it would look something like this. And obviously, the first thing that jumps out to me is I told you this is live, that the reason that screen's gone is because I have a message come up. What's this saying? Your Apple ID and phone number are now being used. Well, why has that affected the screen? Just bear with me a second. This is live. I just need to get rid of that crazy message. And I think that's it. Okay. Where were we? We were there. Okay. So when we, the joys of being live. So when faced with that, what that would prompt in my mind is I can see, okay, that in most of those years there's a downward trend in sales. This is a business it's been going for 10 years, but for most of the last 5 years, the trend is downwards. Yes, a little bit of an upturn in the latest year. So I'd want to know, well, why might that be the case? And so this analysis would then prompt the question for Jeremy. So Jeremy, tell me, why have the sales been reducing for most of the last 5 years? What's going on there? And either Jeremy will know and he'll explain. There could be some reasons for that. Or sometimes, and very often, the answer might be, I have no idea. I just can't seem to grow the business right now. It's stressing me out. I'm frustrated by it all. The first 5 years we grew like crazy. And now, I don't know. Something's just not right. I just can't I just can't figure out what it is that's going wrong. Well, that's a sign that he needs your help. He needs your help because you might have some ideas, or at least be able to ask some really powerful questions that will help the client to come up with some other things that they've not tried. And on Thursday, we might start to look at the delivery side, some of the things that you might actually do around that. Okay, what else might we do? Let me just go back to the slides. Another thing we would certainly want to look at in terms of the trends is we'd want to look at the gross profit. Okay, what's the gross profit been doing? And in this particular case, it was dropping, but the good news is it is actually going back up in the last 2 years. So something's changed there. And again, I would want to ask the client the question, because whilst it doesn't seem to be much of a decrease or much of an increase, what you will find when you look at numbers is that a small change in gross profit can have quite a significant difference on net profit by the time you then deduct the fixed costs, as you know. So even though this trend might not look much significant, it is. And so I want to know, well, why was gross profit reducing? And that might be because, of course, well, that matches sales. Now, it's very likely the client has no idea on this. The client doesn't know. So we would need to drill down a bit further and start to investigate. And we'll come on to that. Let's look at another trend, though. Another one we should look at, of course, is net profit. What is the trend in net profit? And in this particular business, it's quite dramatic. It's quite dramatic that it's pretty much disappeared, the net profit, for most of the years. Now, we're going to come on to something very important in a short while, because sometimes what we have to do when we are looking at numbers in a set of financial statements is sometimes we have to make some adjustments. We have to, and I'm going to show you one of the things that you should definitely do. Net profit you should take with a little bit of caution. Because with net profit, the reason we can see sometimes in a business that we can see major fluctuations in bottom line profit. And sometimes there's some reasons for that, which are not because the business is in trouble, it's just simply circumstances. So in this particular case, in year 8, Jeremy bought a water jet cutter. Well, if you think about some of the implications of that, we have suddenly a big jump in depreciation, which will impact on profit. Not cash flow, but profit. We also have a big loan, a 200,000 loan. And so now there's a fairly substantial amount of interest payments being paid. And so we need to understand, we need to look at these things, and it may be we want to adjust some of the numbers for them. Okay, so they're the trends, and you should certainly do some trend analysis because they will give you a good starting point. However, we have to be careful with trends, because trends on their own, whilst a great starting point and easy to look at, the problem with trends is the fact that we sometimes have to look at those trends relative to something else going on in the business. And that's where ratio analysis comes in. And so the second major technique that we should be using is using ratio analysis. We should be looking at the different ratios because they will then tell us some other stories. And we want to be using a combination of ratio analysis and trend analysis. There are lots of different types of ratios. I'm sure you've heard of ratios. There's profitability ratios. There's liquidity ratios. There's efficiency ratios. There are investment ratios. I'm going to share with you just a few just for now that you absolutely should be looking at with your clients. And then we'll look at something that you should, an adjustment that you should always look at when you are looking at the numbers. We'll come on to that. So the first one that we should look at, and I would suggest one of the most powerful ratios, if our focus is to help clients with profitability, one of the most powerful ratios is the gross profit margin, which is very simple. I've put the formula on the screen. It's just simply the gross profit divided by sales multiplied by 100. Okay, very easy to calculate. Most of these ratios are easy to calculate. Just a word of warning though, that when you read the textbooks on ratios, some of the ratios, like, for example, return on capital employed, you will find sometimes some slightly different formulas, different definitions. And I wouldn't worry too much about that. The most important thing is when you're measuring ratios, be consistent. Be consistent in the way that you are measuring them. Okay, but gross profit is straightforward. It's always gross profit divided by sales. Having said that, one of the adjustments that you might make is if you have a business that is, sometimes we might adjust it for different parts of the business. And so you might want to split these ratios to different areas. But let's keep it simple for now. And so if we measure that for Jeremy and his water jet cutting business, then we might end up with something like this, where the columns are simply the gross, the trend in the gross profit, which we looked at earlier, and then the line in this case shows the gross profit margin. And you can see the line's now very different. We can see that the gross profit margin is actually not as bad as what the gross profit is, because we're looking at it compared to movements in sales. And so if I saw this, if I looked at this, I would be very worried about, and I'd always be very worried if I see downward trends in gross profit. So if this was a client of mine, I'd have liked to have hoped I'd have had the conversation 3 or 4 years ago when things were clearly going in the wrong direction. Now things are changing. They're going back up. And that's good. I'd want to know why. I'd want to ask some questions as to why is the gross profit margin going up. And so we need to understand a bit better about what are some of the things that impact on gross margins. Another ratio that we should look at is we should look at net profit margin. And the ratio of that, the definition, the formula is fairly straightforward. The normal formula is net profit before interest and tax. Okay, that's the normal one. There are different definitions of what you should measure, but that's normal. And again, we can look at, as well as measuring it, we should look at the trends in it. So the net profit margin is the line, and the columns are the net profit. And so if I see big variations, again, I'd want to ask the client the question, why? What's happening in the business? And either the client knows, which is fine, we can then work with the client and start to see how we can change that. Or sometimes, very often, the client has no idea whatsoever, which means they really do need you. Okay, a third ratio that I would strongly recommend you look at is if you have a client that has on their balance sheet debtors, or if you're in the US, it's accounts receivable, then debtor days or accounts receivable is really important because this will impact on cash flow. And again, there are a number of different ways that people measure accounts receivable days or debtor days. One of the adjustments that you might want to make, and it's in the formula, is if you've got a client where their sales are made up of partly sales on credit, but they also have a part of the business which is cash sales. Well, of course, if it's cash sales, there isn't any accounts receivable or debtors. And so we would probably want to split the sales between those two elements so we are genuinely measuring the credit sales. And again, we can look at both the absolute numbers, the absolute numbers of accounts receivable or debtors on the balance sheet, the trends, we should look at the trends, but also look at the ratio itself. And in this particular case, if I was talking to Jeremy, I'd noticed that the ratio has been fairly consistent for 4 years, but then there's been a big change in the last 12 months. I'd want to know why. I'd want to ask the question, why? In this particular case, that's a good thing, because the lower the number, when we're looking at debtor days or accounts receivable days, the lower the number, the better. And I don't want to ask him, well, what's he changed? How's the business changed? Because that's going to impact very positively on cash flow. So how can we make sure that we at least maintain that, or continue to further refine whatever he's working on and bring it down even further still? Another ratio that you might want to look at is asset turnover. And asset turnover is simply the net profit before interest and tax divided by the fixed assets and the current assets. And again, we should look at those numbers, both the absolute numbers, but also the ratio, and measure those. Sorry, I did actually tell you that wrong. Let me just scrub back a little bit. Sorry, asset turnover. I haven't put the formula on here. The asset turnover is how often do you turn over the fixed assets to create sales? And so we should measure that and look at that. But the reason why asset turnover is important is because there's one of the most important ratios, and sorry, that's what the next slide is return on investment. Return on investment is one of the most important ratios that we should measure. And return on investment, I've got the formula on there, but actually return on investment is also arrived at by multiplying the asset turnover by the net profit margin. In other words, return on investment, the one here, is an important measure because it combines how efficiently is the business using its assets to create sales, and how efficiently is the business running itself to turn sales into profits. It takes those two critical parts of a business and combines them into return on investment. And this is important because what you can find sometimes with a business is that they might, on paper, look very profitable. Net profit margins are really, really good. But what might be happening is that they are increasingly using assets, current assets, working capital, fixed assets to create those sales. And if asset turnover is low, then it's a signal that something in the future might come along that will impact on the cash flow. It can affect the viability of a business. I don't want to go into too much detail right now because it gets a little bit more complicated, but the key point is return on investment is an important one to measure. Now, there's a caveat to that, because I always then get a comment about this. And if you've got clients that don't have much in the way of assets, so take my business, for example. My business is a very simple business. I teach people. We don't have plant and machinery and buildings. I don't do accounts receivable or debtors. So my balance sheet is fairly simple. And so for me, asset turnover is inconsequential. It's not important. And so return on investment is not important. So for a very small business, or a business doesn't need much in the way of assets, ROI is not so important. But if you're looking at more traditional business, a bricks and mortar business, if you have a manufacturing business, an engineering business, Jeremy's water cutting business, then return on investment is very, very important. Okay, the last thing I want to talk about in terms of the numbers side of things is I mentioned that we should sometimes make some adjustments to numbers. And one of the things we should be aware of is something that's called Ebitda. Ebitda, E-B-I-T-D-A. Because this is the trend I showed you earlier, the trend in net profit percentage. But we can measure net profit in a number of different ways. The margin is usually net profit before interest and tax. But EBITDA is often used by people looking to invest in a business. And what EBITDA basically means is we take the net profit and we look at it before, so E stands for earnings before interest, tax, depreciation and amortization. So the usual definition of net profit margin is to look at before interest and tax, but we do include depreciation and amortization. And so what we can find is that we sometimes, like the graph on the screen right now, we can see some big fluctuations. In this case, the reason why in year 8 profit was wiped out was because of a combination, was partly because of the interest on the finance, but also because suddenly there was a huge amount of depreciation on this water jet cutter. And so one of the things we should do when we're looking at net profit margins and any other ratios like return on investment that uses net profit within it is we should look at it and adjust the numbers for interest, tax, depreciation and amortization, not so easy to say. And so if we look at this, in Jeremy's case, we can see that actually it becomes now a very different story. It's not quite as worrying as before because there's reasons why we had that big dip. Nevertheless, it's still downward trend subject to the last year, and I would want to ask the client the question and understand a bit more why else they think net profit has been declining and what's changed in the last 12 months. What have they changed in the last 12 months that seems to be working? Because whatever that might well be, we want to do more of it. We want to do the things that are working. Okay, so there's a quick introduction to some of the things that we should look at, a couple of techniques. So just to summarize, we should be looking at trends, we should be looking at some of the key ratios, and the third point is we should be looking at, in some cases, adjusting some of the numbers, like EBITDA, like sales between cash sales and credit sales if we're measuring accounts receivable days. Okay. And the great news is there's lots of software tools out there that will help you create these great reports. So the report, the one that I can show you on the screen right now, this is a piece of software that members of my academy get access to. Okay, so let's move on to the next area I want to talk about. So we've covered so far what is advisory, the definition, and those 6 elements. And now we've looked at some of the simple things we can do to start to look at understand better about what's going on in an opportunity, what's going on in a business, so we can spot opportunities, so we can spot those things going wrong where the client needs help. What we're going to do next is let's move on to something completely different, which is another challenge that people have with advisory, and that is how to package up what it is that we're selling. And I'll talk a little bit about the journey technique for doing this. So when we're offering our advisory service to a client, we need to make sure that we are clear as to, well, what is it? What are we selling? What is advisory? And I've given you a starting point to that with with those 6 areas. So an advisory package may consist of a combination of the goal setting, the forecasting, the reporting, the strategic planning, the advice, and the accountability. Those are the 6 areas. But when we then think about pricing, and we're going to go deep with pricing tomorrow, the thing about pricing is every client values things differently. Every client values things differently. No 2 clients will place the same value on something. And another problem that we have with advisory work is that most clients, if not all, have never bought it before. They have no idea what the price should be. When they come to you, when a prospective client comes to you because they want your bookkeeping or your tax return service, they've probably bought that before. They have a frame of reference of what the price might be. But with advisory work, if they've never bought it, if they've never had that sort of work, they have no idea what the price is. And so we have to figure out how do we capture each individual client's perception of the value. Everyone values things differently. Some will see a small value, some will be a higher value. And so one of the things we should never do is have a single price, because a single price is always wrong. We have to recognize that everyone values things differently. And one of the ways that we deal with that is to use what I call menu pricing. It's about creating a range of different packages, so we then give the client a choice. So they can pick the one based on their own perception of the value. So you think of this, if you like, as a bronze, silver, gold. You'll have a bronze, silver, gold advisory solution. Some of your clients might have a tight budget. They could be a business startup, they could be a small business, and they can only afford the bronze. That's fine. You build a package suitable for them. You'll have other clients who are perhaps more sophisticated, who've got larger businesses, who have got the ability to, they've got cash and they're profitable, and if they see value in your premium service, then they will buy that. If you only offer the bronze level, one option, then those clients can't buy the more expensive one. And also, you might actually sell less because they might not see that the bronze one solves their particular issue. So we have to give people different choices. And when we do that, we create different packages. And one of the things I teach in the Value Pricing Academy is a 7-step framework for doing that, of which, if I take you through the 7 steps, the first thing to think about when we're creating packages is, well, how many different choices are we going to offer? How many? And I would suggest to you that the default, the starting point, is normally 3 choices, 3 packages, a bronze, silver, gold. It's because of something called the magic of 3. What happens with the magic of 3 is to do with psychology, is to do with something we learned from behavioral economics, is that when as customers we're faced with 3 choices, most of us pick the middle one, because the middle one, it feels the safest. It's less risky than choosing the extremes. Now, when you understand that at a deep level, that opens up all sorts of powerful opportunities, possibilities with your pricing, and we'll go deeper on that tomorrow. Now, it doesn't have to be. Sometimes there may be some reasons why you might offer a different number. And tomorrow, when we look at pricing more, I may touch on some of the reasons why you might offer 4 different advisory solutions, and there are some reasons why you might do that. But normally I would say start with 3 because of the magic of 3, and then over time test some different combinations. Now, having said 3, picking 3, that's the first thing that you want to consider, how many choices. The second thing that I'm going to share with you might change that decision. The second thing is the most important thing when you are creating packages, and that's to carry out customer segmentation. And what that means from a pricing context is you need to be clear on the different types of your clients that might buy business advisory, the different types of clients, and what are the different characteristics, needs, challenges of different types of clients. You might have some clients that you know would really benefit from advisory because they're small businesses that don't understand the numbers, and they're struggling to grow their business. They want to become a bigger business, but they're small right now. You might have another type of client where they're very large clients and they more financially aware and sophisticated. They understand the numbers. They might have an in-house financial accountant, for example. The larger businesses that are where decisions have bigger consequences, and so understanding the numbers and different and forecasts and so on become more important to them, and they see more value in that. And so you want to make sure that if you've got those two different types of clients, you want to create a package, a solution that's really aimed at those smaller clients looking to grow. You might want a different package that's aimed at those people that have already large businesses. So for example, if you're thinking about forecasting work for a large business doing things like launching new products, perhaps opening up another head office or something, open up another town or somewhere, one of the things that's important to look at is what impact might that have on cash flow. And so when we do forecasts, we might do scenario forecasting. We might look at different scenarios. What would be the situation on their cash 2-3 years from now if they do open up that head office in the next town? What would be the impact on cash if they do that, but and they increase their sales by what they hope? What happens if it doesn't? And so on. They might want to look at different scenarios. That will be something that wouldn't be appropriate to a small micro business. And so what we want to do is make sure that we build our packages to meet the needs of specific types of clients. We then want to think about in steps 3 and 4. So number 1, how many packages? Number 2, customer segmentation. Number three, what we're going to call those packages. Please do not call them bronze, silver, and gold. We want to come up with names that conjure up some value and describe what's that package all about, who's it for. And then what we also want to do is in step 4 is we want to come up with a description, a summary of each package that describes who it's for and what's the big benefit. Because you're going to start talking to clients and you're going to want to make sure that you use the right words that help to convey the big benefit of a package and who it's best aimed at. And you'll use those words in things like brochures on your website and in the words that you say. Once you're clear on that, once you're clear on the different packages and who they're aimed at, then you can start to build them. You can start to build. So take those 6 things I covered, goal setting through to accountability, those 6 things I covered. You might decide that for your entry-level package for a business startup, for example, you might give them a cut-down version of some of those things. It might not include the accountability, for example, or it might not include the forecasting. You decide based on the type of client you're thinking about. So you create your different packages, and then you want to present them to the client. And a great way of doing that is to use something that I call the tick list technique. So you've seen this before now. It's very common in the SaaS industry where you see a column with, you have all the features, all the things that you would do, goal setting, forecasting, and so on listed. And then you would show your different options across the top with then ticks and crosses for what's included in which package. I call that the tick list technique. It's extremely powerful. There's some psychology behind it. There's some reasons why you'll want to do it. One of the reasons it works is because we are very visual. When we see something like what's on the screen right now, you can very quickly start to see what you do and don't get in the different packages. It's a great summary. It's also a great way for you to have the conversation with your client to build up the value of what you do. And then if you're keeping count with the seven steps, the 7 numbers, the 7th one is then you've got to figure out, well, how do you price each of those packages? And we'll look at that tomorrow. We'll go into pricing tomorrow. But that's one of the things you'll need to figure out. What are going to be your packages? What are you going to offer? What's your, don't call it bronze, silver, gold, but what would be your bronze level, your entry level, your starter level advisory? What things will you put in there? What type of client is that aimed at? And the final thing I want to talk about on that topic is the journey technique. So what I mean by that is that business advisory is a luxury service. Clients don't have to buy it. They have to buy compliance work. They have to have a tax return done. And so if they come to you and you have a tax return offering, you might offer a bronze, silver, gold. They're going to buy one of those because they need it. It's compliance work. But advisory work is a luxury service. They don't have to have it. They've never experienced it before. And so one of the things that you might want to think about is think of it as being a journey. And so for clients that don't yet see all of the value, what you might do is design it so that you consciously recommend to people, I recommend you start with the entry level. And then we'll work with you for 3 or 4 months on that. And once you start seeing the value of that, you can then upgrade to our middle package. And when you then start seeing the value of that, you can always upgrade later. Think of it as the way you structure your packages. If you think of it as an upgrade path, it makes it easier for clients that haven't yet seen the value, they're not sure what advisory is, to at least get started on the journey with you and start paying you something. Okay. We're going to be looking at, I'm conscious of time, the next thing we're going to look at is we're going to talk a little bit about communicating value. I'm going to share some strategies for communicating the value of your advisory. But what I'd love to know first, because I always read the feedback, let me know in the chat box, the comments, what's been the best thing so far? What's one thing that you've got that you think, that's a great idea. I love that idea. I'm going to do that. What's the best thing so far? Just let me know in the chat box. I might not have time to read it live, but my team's reading it and they'll give me the feedback. And whilst you're just typing into the chat box, what's been the best thing so far? One thing I do have for you tomorrow, I have a bonus tomorrow. When you come along tomorrow, we're going to give you a link to a bonus video. It's an 18-minute video from a two-partner firm that in the video they shared how 4 or 5 years ago they nearly went broke. They nearly closed down the business. Now today, just a few years later, they now have a team of 12. They're an award-winning business and a very, very successful business now. And in the video, one of the partners, it's 18 minutes, she talks through a little bit about their story, some of the problems they had. She's going to talk about how they introduced flat fees and why that did not solve their problems. And then she's going to walk through 5 of their secrets for success. She's going to talk about what is the right price. It's an amazing video. It's hot off the press. She only did the video for me just a few days ago. And I wanted to share it with you tomorrow. We won't do it live tomorrow. I'll give you a link to it tomorrow. So make sure you show up tomorrow because you'll then get that bonus. Okay, I'm going to, as I said, the best thing so far, I'll have a look at that later, but I'm conscious of time. We've got so much more still to cover. But before I do that, I did say to you that for those of you wanting to take the next step and go deeper on all the things that we're talking about, we are launching next year something called the Profit Advisory Academy. And the Profit Advisory Academy is a combination of 2 things. Partly it's a structured video-based training program, which is something that we've been running and offering for the last few years now. It's structured so I teach you all the different things that we're looking at over the masterclass, where we go really, really deep. We go deep. I teach you how to package things up. I teach you how to sell. I teach you how to win new clients, the marketing side. It's a program that has always been called How to Profit from Business Advisory. I also ran a program called Price Consulting, where I teach people how to help their clients with pricing. Because one of the things I found when I was doing advisory work myself many, many years ago with my clients, when I helped people like the water jet cutting business, when I helped them, I found that over and over and over again was when I helped them with price, that was the bit that got them really excited. It was also the thing that changed their results really fast. Pricing, helping clients with pricing is so, so powerful. So I decided to take that course called Price Consulting, which I used to sell for $7,000, $8,000, and how to profit from Biz Advisory, and build them into one academy called the Profit Advisory Academy, which is all about giving you all the skills you need to help your clients, advise your clients to help them become more profitable. And the Profit Advisory Academy consists of monthly training with me. Every month we go live and I teach you stuff. Every month we go live. I teach you. Each month we'll pick a theme. We'll look at how to sell advisory. We'll go really deep on that. We might look at pricing advisory, how to do it, and so on. We'll go live for 90 minutes once a month, and also I answer questions. But also, as well as the live training, I mentioned there is structured training over 6 or so months, drip feed training, covering all the bases that you can see on the screen. We go deep on how to spot the opportunities. We look at another case study where we go deeper on the numbers and the things you should measure. We look at the sales process. We look at how to package things. We look at how to communicate value. So it's every month, every few weeks, there's new training unlocked over the course of about 6 months, giving you all the foundations you need. There's also resources. There are workbooks. There are software tools, Excel-based spreadsheets, and I'm going through this fast because I'm conscious I've got more content, but my team's going to, in a short while, in about 2 or 3 minutes, they'll put a link into the comments box. And when you go and click on the link in there, it'll take you to a page where you can see all this information at your leisure. Okay, so I could go through all the details, but there's so much detail that I'm just going to give you the link. And we have workbooks. So, for example, spotting the opportunity, we go really deep on things like ratio analysis. We look at a case study, how to interpret what's going on. One of the key resources I help with is, I know that many clients, when you talk about a client and talk about their goals, most people want to grow their business. They want to grow their business, and you might be thinking, I can't help them do it. I'm just an accountant. I'm just a bookkeeper. How do I help people grow their business? How do I help people make more profit? And so I have a resource with training, videos, and resources giving you idea after idea for ways to increase profits in any business. There's 101 of those ideas. So every client you work with, you'll be able to find something from that list and the training I give you to give them ideas that will help them build a more profitable business. There's a number of resources, software tools that you will get created by a good friend of mine called Jim Rayner. For example, if you want to do ratio analysis and trend analysis and so on, then there's a powerful tool where you can put the numbers in and it produces a beautiful report with graphs and charts, everything you need to present to the client. You can look at reports and things that show the difference between profit and cash. And there's other tools as well that the details will be on the site. And essentially this training and the live sessions, the Profit Advisory Academy is all about giving you the confidence, the skills, the tools so that you can add value to your clients and get paid handsomely in return. I always recommend that when you do management reporting for a client, then your price should be at least around $400 a month and possibly more. I would suggest that when you think about price, and we'll look at pricing tomorrow, but $400 a month is what you should be earning from an advisory client. So that's nearly $5,000 a year. Nearly $5,000 a year is the sort of number you should be looking at. So this training was originally sold. We are officially launching the Academy next year. So right now it's not available. But what we have done just recently is we've made the Profit Advisory Academy available for complimentary to members of the Value Pricing Academy. So everything I've just gone through, if you don't want to wait till next year, if you want to get it straight away, then the way to get it is through the Value Pricing Academy. And not only that, is you get it gifted to you. You get access to all that as part of your Value Pricing Academy membership. So very quickly, I'm going to cover this very quick because I'm going to look at the Value Pricing Academy perhaps a bit tomorrow and Thursday. But the Value Pricing Academy is where I essentially teach people how to build a more successful firm, partly by pricing more effectively, partly by adding more value to clients through the advisory piece, and also helping you to grow your business. So we have some core training that I'll talk about later on in the week. Once a month, I go live for 90 minutes and I teach you aspects of marketing to win new clients. You get access to other trainers like the amazing Teresa Slack, who teaches how to systemize your business, how to systemize your firm. We also teach the foundations of value pricing with a number of my star students who are doing amazing things, and they teach you how they've applied the things I've taught them on pricing so you can get fast results. You might meet some of those if you saw the video at the start, then you met perhaps Jessica and Neil briefly. I also run How-To Thursdays. So what I do is once a month, I go deep on a particular issue and I teach you it, how to price forecasting, for example. And I create brochures for you, all the words you need to communicate the value, and so on. And there are many more things we'll look at later in the week. You get some pricing software. You get access now to the brand new Profit Advisory Academy. You get access to some more software, which we'll talk about later. You get access to my training, how to price bookkeeping, and something very special that's brand new that we'll look at again perhaps on Thursday. So the Value Pricing Academy is focused on giving you all the tools, the training to get better prices, to add value to your clients through advisory work, to win new clients, and just build a more successful, more profitable firm. I have many students in the academy doing some amazing things that you will get to meet. It's an extraordinary community. For example, Neil Criddle, his story has been incredible over the last. He only started start of last year, just before the pandemic kicked off, and he's now one of my star students, getting amazing results with pricing and doing some great stuff with advisory work. And he's really part of the community. And as he said to me recently, he just loves the community, being able to work with other forward-thinking accountants and bookkeepers doing amazing things. So you're probably wondering, what's the investment in the Value Pricing Academy? So the way it works is this, and I focus on all those different things because I know that if you just win one client for advisory work at $400 a month, that will pay for your academy membership. If you just win one brand new client through the Marketing Mondays where I teach marketing, one client will pay for your membership. I've had people using my repricing. Do you remember, if you caught Melanie at the start, she increased some of her clients by 2 or 3 times. I've had many people in the first few months have increased their profits of their firm by tens of thousands by following the training on how to reprice your existing clients, by moving them to value pricing. And so all of those things that you can get access to, whether it's the pricing you're interested in, the Profit Advisory Academy, whether that's what you're interested in, whether it's just building a more successful business, then the way it works is it's a monthly subscription to be part of the academy. And the price, when you join, you lock it in for life. So we change the price every year because we add more stuff like this so we're going to be increasing the price very significantly next time around because of the Profit Advisory Academy will be included. But right now, you will get it complimentary as a bonus for your Value Pricing Academy. So it's just, if you're in the US, it's $375 a month. That's all it is. So one new advisory client, one new client, repricing existing clients will pay for that. I say $375. It depends what country you're in. You can pay in your local currency. So what we're going to do any minute now, Sarah, my team are going to put a link into the comments box. You can click on, you can find out more information about it. You can read through that, see what you get access to. And then when you click on the button, it'll take you to a page where it'll tell you what your investment is if you're in Canada and want to pay in Canadian dollars, or in the UK, or in euros, or whatever it is. So we make it really easy so you can join in your currency. That's why I can't tell you the exact prices, because it depends where in the world you are from. We have people in the academy from all over the world. The most common places are the UK, US, Canada, and South Africa. Now, the thing about the academy is you are in complete control. And what I mean by that is there's no minimum period to be part of it. My goal is just to help you be successful. I'm an accountant. I ran an accounting practice. I struggled for the few years. And my goal is to help other accountants to avoid my struggles, build a more profitable, successful business. And so my goal is to help you get those results. And so you just join the academy for as long as you get value. If you decide after 3 months, 6 months, 2 years, whenever, that it's now you've learned enough, you don't need any more, you can leave. But also more important than that is if you decide to join today, We only open up enrollments until Monday. Then it's closed for 6 months. We close it for 6 months of the year. So it's only twice a year you can join the academy. One is now, and next year will be much more expensive. So now is the best price you can ever get. You lock in the price if you join. And if you join, you have 30 days to change your mind. If at any time in the next 30 days you decide actually it's not right for you, you've been to some live sessions, it's not right, you can ask for your first month's investment back. So the worst that can happen is you give it a try for 30 days. Perhaps it's not right. You just email my team and they'll refund what you paid for the first month. So it's not cost you a single penny. Okay, so give it a try. And you'll see that guarantees on the website. When you click on the link, you'll see the details of that. Now, if you join during the course of the Business Advisory Masterclass, so we close it down, by the way, on Monday. Monday we close, but if you join today, if you join during the Masterclass, we have some special bonuses. And they are, which we'll send out to you straight away, within 24 hours of you joining, we'll send you, firstly, I talked about those 7 steps of menu pricing, and I created a video training course where I teach you how to create your packages for any service. I walk through those 7 steps. I also teach you advanced techniques of menu pricing. I used to sell that course for $597. We're actually taking it off the website now. People can't buy it, but I'm happy to give it to you as a bonus if you take action now. The other thing that we'll do as well, if you're an action taker, is I know that many people want to get started straight away with helping their clients grow their business. And so one of the things that you'll get access to is some software called Profit Diagnostic. We'll look at that later in the week, but I also have created a 54-minute training video, which you'll get straight away, which will walk through not just how to use that software, but how to help your clients grow their business. I'll teach you the words to say, some powerful ideas that any business can use to grow. I will also send you this week a version of that 101 ways. I'm going to look at 24 ways to increase your profits. You'll get the full training in a few months' time, but for action takers, we want to get you some of that stuff straight away. So if you want to, next week, you can start adding value to your clients. You can start confidently giving them ideas for how they can grow their business. And finally, the recordings, that screen's disappeared on me. The recordings of this full masterclass, they'll be available till Monday. But when you join the Value Pricing Academy, we'll actually unlock them for Academy members. So you can come back to this training at a later date if you want to. Okay, I know there's probably lots of questions, so please QQ in the questions box and let me know if you've got any questions. Before we get on to questions, one last thing I want to talk about is a few ideas on how do you communicate the value of advisory. And so I want to share with you a few ideas to get you started, a few things that you'll want to do. And the first thing is you want to be aware of the value conversation. This is something I teach going deep in the Value Pricing Academy, but let me just cover it now as it relates to advisory because it's very important, critical. So the value conversation has 3 stages. There's 3 parts of the conversation when we're talking to clients. The first is somehow my graphics disappeared, but never mind. We don't need the graphic. The first one is we need to uncover the value. We need to uncover the value. What that means is we have to ask questions. We have to ask better questions of our clients. We want to ask questions to understand not just the background of their business, but we want to understand what are their goals in life? What are the goals of their business? What's their problems right now? What are the challenges they're facing? We want to start to ask what's called consequence questions. We want to understand, well, what's the consequences of each problem? What's going wrong in the business and how's that manifesting itself? Is it causing them sleepless nights, stress, relationship issues? Because very often things like cash flow problems has a huge knock-on effect in people's personal lives through things like stress, arguments with the spouse, all these sorts of things. We want to uncover these things. We want to get them on the table by asking great questions. When we ask great questions, what we do is we help the client to really understand the state of their problem. And the more we can agitate that problem, the more we can make it real to them, the more they're going to want our solution, the more they're going to want us to solve the problem. So the first thing we do is we ask questions to uncover the value. Then what we do is we then in the conversation move on to the second stage, which is we want to build the value. And building the value is a combination of two things. We want to add more value. We want to make sure that what we can do is more valuable than ever before. And we might do that through our packages. So we build in things like we start doing for clients forecasting, accountability, and the ratio analysis, and all those things that we can do to be more valuable to our clients. We want to add more value. But we also have to, as not just add more value, we have to communicate it. We have to think about the words that we use. Words are so important when it comes to communicating value. So that's the pricing process in overview. I call it the 3 stages of the value conversation. We ask questions to uncover the value, we build up the value, and then, number 3, and then we capture the value in number 3. That means that, and this is where we go deep tomorrow, capturing the value means what we do is we capture the value that we create and communicate through our price. In other words, and this is critically important, and especially with advisory work, we price based on the value to the client, not the hours you spend. I said to you earlier that as a minimum, you should be thinking about $400 a month. And it might be, and on Thursday, we'll look at how do you deliver advisory. But I covered those 6 areas earlier. A lot of what you'll do month in, month out is producing a report, which once you've set up a template somewhere or got the software, it's a press of a button, you produce the report. You might spend half an hour going through it and making some notes, and then you meet the client. It might be that you spend 2 hours a month on the client. It doesn't matter how many hours you spent, it's the value to the client, and it's worth, I'm going to suggest to you, at least $400 a month to help the client move from the pain they are in right now to where they want to get to. And tomorrow, as I say, tomorrow we go deep on the pricing piece. I'll talk about how do you get those sorts of prices, $400, and in some case much, much higher. What's the process, the psychology, and so on to talk about price. That's tomorrow. But let's just wrap up before we get to questions with just a few techniques when it comes to communicating value. So number 1, the most powerful principle of price psychology is what's called anchoring. Anchoring means this. People have no idea what the price should be. Your clients have no idea what the price of advisory work should be. They've probably never bought it before. They have no idea. Should it be $400 a month? Should it be $800 a month? Should it be $2,000 a month? They have no idea. So what we do is we use what's called anchoring. And essentially anchoring just means that we use other numbers that then in their mind subconsciously makes your price seem very fair and reasonable. And so we want to make sure that when we're having the value conversation, we are measuring things, we're using numbers to help with that. And tomorrow, we're going to look at a number of different ways that you can use anchoring. How you can use anchoring, the sort of numbers that you can use, measure and explain to the client that will make your prices seem really small. Linked to that, we need to be using numbers throughout. If you say to the client, we can do advisory with you, we can meet with you once a month and give some advice, and it's going to cost you $400 a month. They'll probably say that's expensive because they don't know what that's going to do for them. But if we can quantify, if we could do some analysis with them, if we could play with some numbers and show them some ideas, and it may be that as we play with some numbers, you and the client can see the numbers growing, and over the next 12 months, they can add 100,000 to their profit. And by the way, I'll show you exactly how you do that tomorrow. I'll show you how you do that tomorrow. Because if you said to the client, I think we can help you get to that extra $100,000. The way we do that, the way we add $100,000 to your bottom line profit is we work together. This is our advisory service, and it's just $400 a month. Now what's happening is the clients now, they may not get to the 100,000 of extra profit, but they can now start to, the benefit becomes more tangible. When we use numbers, when we quantify, the benefit becomes more tangible. And so they can see the benefit, they're now much more likely to buy. And price becomes less important. Again, tomorrow I'm going to show you how you do that. How do you use numbers? How do you build that into the pricing piece? The third thing that I want to share with you now, though, for communicating value. So we use anchoring, we quantify. The third thing is to systemize the conversation. And the way that you do that, and systems are so powerful, is you want to have pricing brochures. These can be physical brochures like this, or they can be PDFs, but you want to have a system. You want to make sure that you have a process, a script, that you say the right things in the right order, so it builds up the value in the client's mind. And if you decide to join the Value Pricing Academy, one of the things we do is you get, I think that I've created 15 brochures for different services: tax returns, tax planning, bookkeeping, but also various sources of advisory work, business advisory, price consulting, forecasting work, so that you've got all the scripts, the words, everything you need to get much higher prices. Right, we are almost at time for questions. How are we doing for time? Yeah, let's. I did say to you that there's a lot of things we're going to cover, and tomorrow, by the way, there's even more content tomorrow. So make sure you got your pen and paper together tomorrow. There's a lot of stuff on the sales side and the pricing piece. So today we've covered a lot of ground already. My question for you is, and I'm going to look later at the comments that you put in there, is are you a note taker or are you an action taker? Are you going to do something? And what's that going to be? As a result of today, what are you going to do? And if you want to, you could put it in the comments box if you want to really commit to yourself and to be accountable. Because the best way to go and do something is to tell other people, I'm going to do this. This is what I'm going to do as a result of this session today. What are you going to do? Are you an action taker, or are you someone who just sits there and takes notes? So if you're going to take action, what? What are you going to do? Put it in the comments box and tell other people as well. Okay, so tomorrow we're going to look at how to sell advisory work. We're also going to go deep on the calculating the price. How do you come up with the price, a value-based price for advisory work? And also remember, when you come tomorrow, as well as that bonus video that I'll send you a link to, you also help make the world a better place, because tomorrow when you come live, we will make a contribution to provide a day of education for a child somewhere in the world who doesn't have the privilege of getting access to that kind of information, that kind of education. Okay, it's questions now. Let me answer as many questions as I can. So you'll just have to bear me a second, because there is a lot of stuff in the chat box. So it's going to take me a while just to find the questions. So bear with me. We have lots of comments from earlier, like On the Book says hi from Raleigh. Shante says hello. And my good friend Bob Harper is here. Hi there, Bob. Hope you're well. Okay, I'm just so many other people. David's part of the Value Pricing Academy, one of my good friend from Houston. Hi, David. Where's the first question? Okay, questions, lots of comments. Jeffrey, I'm hoping you've got the answer to that now, the workbook. That was a while ago, that was. Of course, there's lots of comments about loads of people in the VPA as well. Of course, Lisa says, I'm in the VPA and loving it. First year I worked on changing my pricing. I increased my income by 20%. Same next year, still working on learning advisory work. In fact, just John Johnston, he's one of my, I've known him for many, many years. He joined the Value Pricing Academy right on day one, which is in 2014. So John's been with me since 2014, and comes to most sessions, and he's an action taker. There's no doubt about that. Okay, I'm still looking for. There's loads of comments from people who are in the academy saying what they've. Okay, here's a question, Glenn. Oh no, it's not a question for me. It was the Facebook link. Okay. Let me scroll through again. Okay, I don't know if this is a long question, so just bear with me a second. It's from Neil Campbell. Is this session all about financial advisory, or will there be open discussions about, for example, my business had a data breach and it cost my company $200,000? How How could you advise me? Okay, so Neil, I think I covered that at the outset when I gave the definition of business advisory. What we're really talking about here is how to help clients to, and Neil, I remember who you are now. Yeah, so the focus is specifically about helping clients with building more profitable business. There are many other areas we could advise people on. Tax advisory. I know Neil's very much in the field of helping accounting professionals with risk issues, so we can give advice around risk, like data breaches and so on. There are many forms of advisory that we can do, and most of what I've talked about today, by the way, is if you do tax advisory, risk advisory, whatever else it might well be, then everything I talked about with packaging and giving 3 choices, that's still just as relevant. The stuff I talked about communication is just as relevant. It's just that today we're focused on particularly profit advisory. Okay, next question. Let's see. Next question. If you don't put the QQ in front, I might miss it. Lots of questions about the workbook. Lots of comments. Lots of really good comments and so on. Robbie Wood says, could you list the 6 business advisory components again? I will do my best and remember them. So number 1, the first one is goal setting. There has to be an element of goal setting as part of an advisory solution. Number 2 was strategic planning. That's working with the client to come up with the strategies, the things they need to do to get from where they are today to where they want to get to. Number 3 is reporting, some form of reports. We've talked about that today with some of those graphs and charts and so on. Number 4 is advice, giving them advice, meeting once a month to give advice to help understand the numbers. 5 was, I think, forecasting work. I could have got this in the wrong order, by the way, but it doesn't matter. Forecasting work might be a part of your advisory. And number 6 was accountability, making the client accountable for taking action. And actually, I'd seen now that Sarah did, because Donna's asked as well. So Sarah did actually post them in the above. Claire Jenner says, I think I've missed some of those 7 steps. I only have 4. So that was when I talked about the menu pricing. The 7 steps are, very quickly, if you are building your packages, is number 1, how many packages? Number 2, customer segmentation. Number 3 was how you're going to name them. What's the name for your packages? Number 4, what's that description, that summary that you can use on your websites, in your brochures, in the words you say. 5 was then the process for building the packages, and I talked about the journey technique. 6 is how do you display them? How do you present your packages? And I mentioned the tick list technique. And number 7 is how do you price each of your different offerings? So if you've got a bronze, silver, gold, how do you price each of them? Where's the price come? And that's tomorrow. Tomorrow we look at the pricing piece in detail. Carl says, where are the recordings? So the recordings will be on my YouTube channel, where most of you are right now, and they'll be there until Monday. Love the financial analysis. Thank you for that. I think I just answered you, Carolyn. You said about the 7 steps, so I've covered that. Okay, then I've got to the bits where some of you are saying, what's the best bit of the day? So thank you for those comments. Thank you, Peter, for that. Wendy loves the trend analysis. Lisa has a better understanding of customer segmentation, which Lisa's been, I've known Lisa for a long time now. And one of the things that you will find, and the reason why we do monthly training in the academy, is because sometimes we have to hear things 2 or 3 times. There is so many things we need to get right in our business that we can't do everything at once. Okay, John says, a reminder of the ratios for clients because we don't do it consistently. Thank you for that. Okay, let me try and find some more questions. There aren't. Okay. Great one here from Ali. Ali says, should we keep compliance packages and advisory packages separate, or can we merge them? So Ali, my advice would be to separate them. Because the way that when you are pricing, I mentioned the 3 phases of the value conversation. You ask questions, you build the value, and so on. If you take one of your core services like bookkeeping, for example, it's a very different service to advisory. And so when you're building your bookkeeping up, you'll have, and we'll look at some of this tomorrow in the pricing piece, but there are different things that impact on the price of bookkeeping, the scope of the work, for example. Bookkeeping would depend upon things like how many transactions a month, how many bank accounts they have, and so on. Very different scope questions for advisory work. And so when you're coming up with your price, which we'll do tomorrow, then it's much better to price them both separately. But also because when you bundle too much stuff together, you start to undervalue things. And whereas when you separate them out, when you have a brochure for your bookkeeping separate to a brochure for your advisory, you're then going through 2 different processes to build up the value of each of them, and you'll get a better price when you do that. Ali, I hope that helps. Now, what you can do, just a caveat to that, so just to go back to, so Ali, what you can do is, and one thing that I know some people do is, you might, for example, let's say you're an accountant, you do annual financial statements. In the UK, we just refer to it as annual accounts, the end of year work. You might have a bronze, silver, gold, and you're thinking about, well, what value could I build into my premium annual financial statements? Or what value, if you do bookkeeping, could I build into my premium bookkeeping? So when you think about your premium compliance service, you could build in some elements of advisory. It might be that if they buy your premium bookkeeping or your premium annual financial statements, you might include some ratio analysis, you might include some trends, some reports with graphs and charts, you might include a simple 12-month forecast, for example. And I would still have the full advisory service separate. And the thinking and the idea there is that what you do is those clients that come to buy compliance and they like the sounds of those things in the premium, when they buy them, you then design it so that those extra reports and things that are in the premium, that gets people to spend more with you for your compliance, but it also becomes a taster or a teaser of what more they could have. So once you've been working with a client for a year on the premium, you could then ask the question, so when we've been doing your bookkeeping or your annual financial statements, how do you find those reports and the extra analysis we do? And when they say, they're so good, I find that really valuable. Well, when you're ready to take things to another level, let me talk about how we then go even deeper still with our analysis and reports and advice. It's called our advisory service. So you can use one to lead on to the other. Again, think about this journey technique. Think about people upgrading. Okay, Ali, hope that helps. Let's move on to another question. Still lots of people saying what the best bit of the day was. I'd love to read them all out, but I'm conscious of your time, and you've probably read them already ahead of me. Okay, so I don't know the first name, but live stream business and wellness. How many months does the program go for? So if you, when you say the program, if you join the Value Pricing Academy, then you can work with me month in, month out for as long as you get value. I have people like John Johnson that's been with me right from day one in 2014. But you stay as long as you want. Here's the thing. Every year we add more value. There's more things that I build in to help you build a more successful accounting firm. When John joined in 2014, John, you probably remember, you just got one session from me a month. We did one pricing session a month. Now in the academy, as you'll see later in the week, you get access to something like 6, 7 or 8 live trainings, some with me and some with other people doing amazing things. Some of my staff students doing amazing things. They'll teach you what they're doing. And so you stay in the academy for as long as you get value. And even though we add more stuff every year, you still pay the same price. So you lock the price in. If what you meant by that question, by the way, was the structured training around the advisory, then the advisory videos and stuff is currently over 6 months, but we're adding more content right now, and it may grow to 12 months. So we have a number of programs that you get, the training is drip fed over a period of 6 to 12 months. Okay. So as that, I know there's a number of questions from you. I hope that's answered your question. Does the Masterclass provide a coupon? If you mean is there a discount, no, there isn't. We do not discount. And it's also one of the core things that I recommend for you when you are pricing. When you price your services, you shouldn't discount. You should maintain the integrity of your prices. You should be confident about your prices and confident about the value that you deliver, because you can deliver huge value. Jessica is here. Hi there, Jessica. I think I saw that your team won. So congratulations. Jessica follows the Miami Dolphins, I think it is. So thank you for that feedback, Jessica. Let me see. I think, Robbie, I've dealt with this question, haven't I? So I'm going to assume that's okay. And I think, again, same question. I think I've covered that now. And actually, I've seen that Sarah did answer the 7-step framework as well. So thank you, Sarah. If you missed one of those numbers, then it's been answered by my team. Oh, wow. Thank you, Corin. Is that Corin? Is that pronounced right? You've signed up for the Profit Advisory Academy. Cool. I love action takers. And by the way, when you join the Value Price Academy, we have a kickoff session on Monday. I'll tell you more tomorrow, but we have a session where we officially welcome everybody and then we walk you through where to find everything. And any more questions? I can see lots of comments. Thank you, Christopher. Question. And I've covered this one already, I think, Ali. I'm guessing you asked twice because you didn't want me to miss your question. Brian Wright has a question. Brian says, what might be the best way to approach business clients to sell business advice? Okay, so Brian, I'm going to answer that tomorrow. That's really the one of the two themes tomorrow. So the first part of tomorrow is going to be the sales process, the conversation. How do you approach having the conversation with a client? And then the second half tomorrow is going to be, we'll go deep on the, how do you come up with the price? Okay, so if that's okay, Brian, if you can wait till tomorrow, we will definitely be answering that question. But thank you anyway for checking. Okay, so let me just read, this is quite a long one. So Phil says, do we learn everything from changing my practice pricing with compliance and all the way up to advisory in the Value Pricing Academy? Straight into advisory is very scary. Yes, so Philip, that's a great question. Thank you. So I'm going to cover it a bit more on Thursday, but in the Value Pricing Academy, we have a number of different streams, if you like, or paths that you can go down, because everybody's different. And so you focus on whatever's best for you. There are something like 7 or 8 live training sessions most months. And I say to people, don't go to every single training session every single month, because you'll get overwhelmed and end up not knowing where to start. Pick the ones that are right for you now, because most of the trainings come round every year or every 2 or 3 years. So you pick the ones that you want to start with. Similarly, there's some structured video training. So in the Value Pricing Academy, there are 3 structured programs. The one that I recommend people start with is called How to Build an Extraordinary Accounting Firm. It's over 6 months. It's over the first 5 months. And what we teach in that is we start off with what's your strategy. We go deep into building a strategy, whether you should niche or not, how to build an ideal client profile. Then we look at the foundations of value pricing. We look at building a pricing system to price anything, compliance work. And then we start to look at the marketing foundations, how to build what's called lead pages, opt-in pages, how to build a list of people. And then we also teach something called the appointment generation system, a structured automated process for dealing with people that want an appointment with you so you attract the right clients. So they're the foundations of building an extraordinary accounting firm. And that's where I actually recommend people start. But we also have the training on the Biz Advisory, because some people want to jump straight in there instead, and that's fine, you can do that. And then we also have a 6-month training on how to price bookkeeping, because that's the core service that certainly bookkeepers do, and most firms now do bookkeeping. And that's something that many people struggle with, pricing bookkeeping. And if we can get that right, you can start to increase your prices very significantly. I know people like Jessica, she's doing amazing stuff with her pricing with bookkeeping work. And so you pick wherever you're at. And with those structured trainings, you work through at whatever speed you want at. You can work through all three of them simultaneously. You could do the bookkeeping course first, and then you could start working through the advisory course. Phil, you're in control. You can choose to work through at the speed that you want and pick up on the topics that you want. If you really want to grow your practice right now, then we have Marketing Mondays. I teach 11 times a year. I teach you marketing. But if you've got enough clients right now, focus on the advisory, for example. So you choose. There's a whole range of different programs that you can work through, and you just pick whatever's most important for you right now. The car in space. I don't know what your first name is. No, there isn't an option to pay up front. It's a monthly investment. Ali's asked that question again. Ali, I'm hopefully that's because I've answered it now. What else have we got? Okay, just in case Sarah's not seen it, Sarah, Dean has an issue trying to sign up with the Academy with the link. So perhaps, Sarah, you've probably already done this. If you'd help Dean. By the way, if anyone does have any questions, Sarah's my partner. She's next door. And you can email her on support@wickersham.co.uk if you have problems. Okay, this is probably a long, I don't know if I've got time to do this in fully, but Nassos asked a question. How we overcome disputes in consulting with CEO and CFO, especially when they are placed in entity for a long time, over 10 years? Nassos, I'm not quite sure exactly what you mean. So if I don't answer your question, then I might suggest that you put it in my Facebook group and perhaps expand on it a little bit. And that goes for anybody. If I don't answer your question properly, put it in my Facebook group, and other people will chip in with answers. If you specifically need me to answer it, you can tag me. I can't promise I'll answer this week because, as you can see, I'm quite full on this week with teaching. But anyway, how do you deal with disputes? Very often, disputes can be sorted out when we manage expectations right at the front. Things like, so I'm not sure exactly what you mean, but things like fee disputes, for example. When I started my accounting firm back in 1996, for the first 3 years, I was pricing based on the hour, and fee disputes was a common problem. Probably about, I would guess, 25% of the time I sent an invoice out, I'd get some sort of pushback, some sort of complaint. Sometimes clients refused to pay because they weren't expecting the bill. It was a surprise. I had fee disputes all over the place. And so I then, fortunately, in 99, figured out value pricing and started then giving people certainty right up front as to what the price would be. We have to be clear with the price. But we also have to be clear on everything else, the scope of the work. What is the scope of the work? What are we doing for that price? And most important, what are we not doing? Who's responsible for what? So so Nassos, you mentioned things like CEO and CFO work and so on, and I'm not sure what examples you're thinking of, but sometimes disputes arise because the client thought you'd do that, and you thought they'd do that. It's the responsibility. So when we're creating a proposal, there are certain things that want to go into a proposal. We teach it in the Academy. And one of those is who's responsible? What are you responsible for? What are the client's responsibilities? The clearer we make things up front, the more we reduce the problems that can happen later. Okay, Ali's now got a different question. So hi there, Ali. Do we have to offer compliance at all? That's an interesting question. And no, you don't. You could build an accounting firm, or at least a consulting firm, just doing business advisory. And there's nothing wrong with that. It could be a very successful business if you're offering just advisory. I would recommend that if you're going to go down that route, that you particularly think about your niche. Just be really clear about a niche and target the right people. But you can build a very successful advisory consulting firm. There are consulting firms that make a lot of money. And so you can do that. What I found from both my own personal experience and what I also found from then working with hundreds of accountants, thousands actually since the year 2000, is that sometimes compliance work is a great way of getting the advisory work, because the compliance work, if that's our comfort zone, doing tax returns, doing book, if that's our comfort zone, yes, we have the compliance work and we start to build the relationships. And because they're existing clients where we have a relationship, once we've built the relationship, it's then easier to sell the advisory work. Also, interestingly as well, just as an aside, I know it's not your question, Ali, but what I found as well, and what many other firms tell me the same thing in their experience, is that when you start offering advice, if you're a compliance-based firm and you then start offering advisory, what I found was that from 1999, 2000, 2001, my conversations with potential clients changed. Before, my conversations were around compliance-based questions with a brand new client. Now I would start asking them questions about how's their business, what's the challenges, the pain points, what's their goals in life. And over again, I found that I got new clients, better quality clients for compliance work. They didn't buy the advisory straight away, but the fact that I spoke different, I talked different, I asked different questions, I had other things that I could do to help them grow their business, made them think, this accountant's a bit different. I want this accountant to do my tax returns and my bookkeeping and my accounts. So just offering an advisory solution, from my experience and from many other firms I've then worked with, have said just simply offering advisory helps you to win more compliance work. I know that wasn't your question, Ali, but hopefully I've answered your question as well. Right, I think we're getting sort of close. Zippy, is it Zippy or Zippy? I've seen you before. I know you come to my sessions. But anyway, you're looking forward to the session, which is, I am too. Tomorrow's my favourite one of the three. Okay, what did Crystal say? For the profit advisory, you mentioned that the business advisory dripped over 6 months. Will we get enough of the course to attract new advisory clients initially? It's a great question. Yes and no. This is why we introduced literally a few months ago for members. We launched the Profit Advisory Academy a few months ago, and for now it's exclusive and free to members of the Value Pricing Academy. We're not letting anybody have access to this until sometime next year. And so when we introduced it, what we launched was not just the training, the structured training, but the live session. So once a month you go live with me, once a month apart from December. December's a bit special and different, as you'll see tomorrow or Thursday. But once a month, what I do is I will pick an aspect of the whole advisory piece and go deep on that. And so in those sessions, I also answer questions as well. So if you're at the stage where you really want to attract new clients for advisory, you can ask me the question in the live session. And secondly, if I find I get lots of questions from people wanting the same thing, I change the curriculum around. I will come up with or I'll create some resources and make them available in the live sessions. So in the live sessions, there'll be new resources and things that will help you to deal with whatever your issue is right now. Okay, I think, Crystal, that might have been the last question that I can see. Sarah, just shout if I've missed out anything whatsoever. But we have been going for just over 2 hours. And my voice is starting to go a bit, you might have spotted, and so perhaps now is a good time to finish. So tomorrow, you know the drill now, that tomorrow we're going to get really deep on those two areas, how to have the conversation about advisory, the selling process, if you like, without the uncomfortable selling. And then we'll really go deep on how do you come up with a price? How do you price advisory work? And of course, answering your questions again as well. So if over the next 22 hours you think, oh, I wish I'd asked Mark that question, then in 22 hours time, you'll be able to ask me the question. So think about what else you want to know, and make sure you do put them in the comments box. So I'm going to, there's no more questions, I don't think, Sarah. So I'm going to read through the comments in the chat box right now. We always play out with some music. And so it's actually some music. And people, if you've not been to my sessions before, it's just a little insight into mine and Sarah's life in Portugal. So you might enjoy this video that's coming. It's about 3 minutes with some videos, with some music. And I'll read the comments. And I will see you same time tomorrow. Try to come 15 minutes early because we also play some countdown music with some little interviews of people doing some extraordinary stuff. Okay, I will see you tomorrow. Bye for now.
I wasted all my time, I wasted all my nights, I wasted it on someone who's indifferent. He didn't love me right, he told me I was blind, but I never really wanted to listen.